Good evening, everybody. My name is Shaun from Berg. I'm from PSG Online. I head up client education. Welcome to one of my favorite subjects, technical analysis. I am the technical analyst at PSG Online. I do a lot of analysis on the charts for the research department. But here's the agenda for today. Just three main things. Just a quick introduction. What is technical analysis? And just to discuss some of the tools. Obviously, it's a very broad area of approach to the market. So I'm going to highlight some of the tools that I use, and then also just touch on some technical indicators, because I understand there are thousands of technical indicators out there. My objective today is just to highlight a process for you guys, and those who've never ever traded technical analysis, maybe introduce you to the art form. There's no right or wrong answers. It's just understanding how to use the art, and obviously the interpretation is what's important. So let's get into it quickly. What is technical analysis? Bottom line, when it comes to share market analysis, you need to answer three questions. You need to know what must I buy, when must I buy, and when must I sell. And I always joke, I say, if you can answer those three questions, would you make money in the stock market? And the answer is yes. Because obviously we just cloud it a bit more by giving it names like fundamental analysis and technical analysis. These are the two approaches to the market. So fundamental analysis also a question, what must I buy? And you can break it down further into what we call macro fundamentals, looking at the big picture, what I call economics 101, things like inflation and interest rates and things like that. And when we're talking about micro fundamentals, this is more specific to the company, the financial statements, financial ratios, and things like that. So that answers the question, what must I buy? And in tonight's presentation, obviously, we're concentrating on technical analysis, and that asks the question, when must I buy and when must I sell? So the critical success factor here is timing. Okay. With fundamental analysis, there are a lot of factors involved. With technical analysis, there's only two things we're looking at, price and volume. Okay. And obviously, there are a lot of principles and assumptions behind technical analysis. I can just give it very, very briefly. What is technical analysis? It's everything we know or feel or think about a company. And that's all reflected in what we call the fundamentals. So yes, technical analysts might take it in consideration. So it's a rational and irrational opinions and things like that. And that's all discounted, number one, into the share price. Okay? And number two, the number of shares traded, what they call volume. So that's where we look at those two factors. Now, price and volume is determined by supply and demand. Okay. So if we're optimistic about a company's future prospects, we're going to buy into the company and obviously create demand, and that's going to push the share price up. If we think there's no prospects, we'll be selling off the share, and obviously the share price will drop. But that supply and demand will create what they call trends. Now, one of your goals as a technical analyst is to establish or determine what are those trends. And then from there, we're going to start looking for patterns. And patterns, as I say, trends are repeated. History repeats itself. When it comes to the stock market, you must understand there's human psychology involved in the market, and that's what moves the market. So bottom line, I always say to people, is market sentiment, how people feel about certain things, be it the market, or be it about a company, whatever the case might be. And that brings me to the next slide. We talk about market psychology. You must understand there's two big factors that move the market, greed and fear. Those are the two big emotions in the market. So you get three different phases in an uptrend and three different phases in a downtrend. So let's take an example at the bottom of a cycle. Stage one. This is where people a small group of people start anticipating things are getting better. Okay, be it the economy is bottoming out or the market is looking better, and more people, a small group of people get involved in the market. Then we get to the second stage where more and more people acknowledge that improvement is actually underway. Okay, and in the third stage, this is where I always joke, this is where the hairdresser gets involved in the market. And this is where they always say, when the hairdresser gets involved, it's time to get out. This is where the sentiment is, buy a share today, buy a Porsche tomorrow. Okay? And Alan Greenspan, the ex-Reserve Bank governor in the States, he coined the phrase irrational exuberance. This is where the market's going crazy. This is where, we have excessive greed. Okay? But at the top of the market, obviously, you also get a small group of people start seeing that things can't stay like this forever. Things can't be rosy like this forever. And they start taking their profits, and the share price starts coming off, or the market starts coming off. And you also have things like stop losses and that being triggered, and obviously the market falls a bit further. That's where we get into the second stage in the downtrend. where things are really deteriorating now, and more people coming to the market and they're selling. And the third stage, right at the bottom, this is when your poor hairdresser can't handle the pain anymore, and she says, well, things are really going to get bad, and she sells. And the question always is that the right time to be selling? No. Okay, that's the right time to be buying. When everyone else is selling, you want to be buying, and when everyone else is buying, you want to be selling. So that brings up what Warren Buffett once said. Be fearful when everyone else is greedy, and be greedy when everyone else is fearful. Okay. But the point of this slide is just understand it's market sentiment, greed and fear, that moves the market up and down. Okay. So technical analysis, in a sense, is looking at market psychology. Every single point on the graph is a buyer and a seller, and I always joke, one of them is wrong. Hopefully it's not you. Okay.